Let's take a look at some charts on Yearn Finance Wi-Fi for Brave New Coin. So Yearn is a DeFi platform with a native governance token used for voting rights and staking rewards for holders. The network itself is a yield optimizer that aims to maximize yields by automatically switching funds across a range of lending protocols. So on paper, and in reality, I think it's a great service, especially as somebody who is casually involved in the DeFi realm. I don't have the time to look at every single vault or every single yield farming capability and switch between everything with the fees and blah, blah, blah. So the general idea is, in a non-custodial way, you provide Yearn Finance with an asset and it provides you with a yield. And if we look at what those yields vary over time, you can see across, this is just 3 examples here, but you can see where it would be advantageous to throw your USDC in Compound, then where it's advantageous to throw it in DYDX. I mean, you can do the same with DAI. You can see how it went insane on DYDX, and now it's more profitable to throw it in Aave. ETH the same. So it's a useful service. It makes sense on paper. And if you're looking for the highest yields in certain DeFi apps, it does a job that is useful. If we look at the TVL for Yearn, it was way up mid-2020 and has sort of petered off and is declining. I think the token price for Yearn is absurd. I think the tokenomics for Yearn is absurd. But that's an opinion, right? Like, what does that matter? It's the data that's going to really show what's going on here. If you can reliably get better yields in Yearn, then why wouldn't you do it? If the fees make up for it, if the vaults are available, they've got all sorts of swap stuff and leverage stuff and insurance, and everybody's trying to do everything, right? So I don't know the exact rationale or reasoning why this exploded and then really is declining rapidly here. My guess is this is the market's way of saying, okay, we either don't trust Wi-Fi from an attack perspective, or we can do better elsewhere, or it's not optimizing enough. There's got to be a reason here, because theoretically this should be a leader in TVL, right? Like, why throw it in one DeFi dApp when you could throw it in an optimizer that switches between everything? If we look at the transaction counts and average transaction values for the token, the average transaction counts have been rather muted and declining, whereas the mean transaction values are basically hitting all-time highs. This makes sense with ETH fees being extremely high. You're going to see a decline in transactions and a rise in average transaction values just based on ETH fees alone. That doesn't mean any of this is bullish for the token price. So I love the idea of the vaults. The token makes no sense to me whatsoever, but that's the same for most of these governance tokens. In a vacuum, to see transactions declining over multiple months certainly isn't bullish. It matches the TVL, right? If we look at NVT, which is an inverse metric of economic utility, it's been on a slow uptrend, active addresses on a slow downtrend. So in a vacuum, again, that isn't bullish either. If we zoom in a little bit here, none of this screams buy this thing based on on-chain metrics, because I want to see active addresses up and to the right. Look at Sushi, for example. Look at that active address profile. Look at the Tezos active address profile, even though that hasn't been super bullish. But those are the things you want to see if you're confident over the long-term health of the market. This is a sentiment gauge more than anything. Sentiment here is people aren't using Wi-Fi, the token. Maybe there's an underlying reason for that, but active addresses are stagnating or declining. If we look at Google Trends for DeFi crypto, it's definitely had a resurgence in January, February, declining a little bit here, much like the Yearn price. If DeFi crypto or if yield farming was taking off again, I expect things like Wi-Fi to explode, just because that's where people are looking. I think right now the flavor of the month is NFT related stuff, and less so yield farming related activities. If we look at the technicals for Wi-Fi USD, 5200 EMA on the 4-hour, volume, RSI, VPVR. So where this sits on VPVR is favorable for a path of least resistance being up instead of down. You can see there is a ton of volume support between 20 and 35K basically. I like that this has a bullish 5200 cross. I don't like that this really hasn't been able to hold on to higher highs. I mean, it's attempted to, but they've been sold off each time since November. Volume has generally been declining as well. So again, a bit of a market sentiment tip-off that there isn't a lot of excitement or exuberance to buy prices up here as opposed to something else. I think the integer bias is going to hurt something like Wi-Fi, which is priced at 37K per coin, regardless of how many are circulating. You're going to see a lot of retail players gravitate towards stuff that's $10 or less, $1 or less, versus stuff like this, just because of the multiple. People are going to buy Doge over this. They just are. They're not going to look at this and take it seriously. They're not going to look into it if they're a retail trader because of the price. And that's just the way it is. So VPVR and trend still looks favorable there. Trend on the 4-hour looks favorable for up as well, based on the cloud. Cloud looks like it's flipping bullish. It's got resistance based on monthly pivots around 48K, which is previous local high, with 64K as the eventual possible upside target if this has strong bullish continuation. Again, on the 4-hour, you can see this inverted head and shoulders that we saw across basically everything over the past few weeks playing out in a bullish manner right now. Wi-Fi BTC, I mentioned a month ago, this descending triangle. Anytime you get just a series of higher highs over and over into a tighter range, definitely not a bullish situation. You can see we had a beautiful head and shoulders textbook here break down, and now it's just printing. Basically, it's spiraling down, right? Declining volume. It's really in this do or die zone here between 0.5 and 0.655, and whatever this is. I can't really see this any other way than a bearish manner. If we look at RSI and we kind of zoom out, if you're looking at like a high time frame, like the weekly RSI or something, you can see how we're getting sort of lower lows and higher RSI. So there is an attempt at some sort of bullish divergence, but it's definitely not there yet. For me, I wouldn't even think about buying this below, unless it's below 0.5. I want to see massive volume capitulation. I want to see tears. I want to see strong fear before I start to buy this against BTC. And for the ETH pair as well, you can see that descending triangle potential, descending volume profile. It's attempting to build a bullish divergence, but it's not there yet. So it's early stages. So overall, great idea on paper. Love the idea of the protocol. I love optimization. I love any sort of algorithmic switching based on the TVL decline since mid last year. It looks like the market either doesn't trust Yearn, or there's some underlying reasons why Yearn isn't selected over, say, the individual yield platforms themselves. The on-chain metrics for Yearn are rather abysmal over the past few months, just continued to decline. Google trends for DeFi, crypto, and yield farming are rising, but probably taking a backseat to other flavor of the month stuff like NFTs. So if yield farming or DeFi related things pop up again in the future, I expect Wi-Fi to do well. It did well in the past. And technicals on the USD pair look neutral to bullish. Technicals on the BTC and ETH pairs look rather bearish, with just no signs of strength since listing, really. So let me know what you think about Wi-Fi, what I missed about Wi-Fi, because inevitably I've missed something about Wi-Fi. It's a very fast moving sort of project. Let me know in the comments below, and happy trading.